Welcome back to KOAN Hot Talk, 1080 AM, 95.1 FM. The Joe Miller Show. Charles Ortel is with us, published columnist, media personality, Washington Times, Breitbart, CNBC, Fox. Very informed on foreign affairs, and we've had a great few minutes with him discussing what's going on in the Middle East. I wanted to touch, though, on another area that you have, I think, some special insights in, and that's the international economy and where it's headed. Of course, part of that's going to be dependent on what happens in these conflicts that we're seeing erupt, Middle East, Ukraine, et cetera. But where do you see things headed? Are we going up or down over the next several months?
Well, I am an optimist. I will tell your audience that now. I was born in California. I have a sunny disposition. But, the outlook I see is we are headed towards an imminent crash, worse than what happened in 2008, 2009, worse than what happened in 1929 to 1933, worse even than what happened in 1873. And I get there by looking at the total amount of debt that's on the global economy in relation to the total amount of wages that are paid to people. In country after country, statistics, economic statistics are squishy, but on this they're pretty good. They show that for most advanced economies, the bottom 80%, the overwhelming majority of people across the world save no money. They can't. They're barely making ends meet. So there's enormous pressure on wages, and that comes both from opening up, of India and places and Africa, places like that, but increasingly more from the fact that if you think in your own life, how powerful is your cell phone today versus what it was in 99, your computer versus what it was in 1999? How much more can you do? And how cheap are these items and compared to what they were in 1999? That tells the productivity tale for those of us who are engaged and active and learning and fighting hard to stay above water. So human labor is under siege. And the central bankers, frankly, Republicans, Democrats alike around the world, have errantly followed the Fed's lead and forestalled the day of reckoning, pushing down interest rates, down, until they can't go any lower. And now what we're seeing are the signs of the cracks in the big places, like big economies like China, in the oil market, in the shipping market around the world. We're seeing that in order to cope with the demands to actually pay down this debt, people are behaving responsibly, and they're slashing prices for manufactured goods. They're slashing workforces. So we have this gigantic debt bomb, and we are much more leveraged outside in Europe, in North America, in Japan. We're far more leveraged financially than Russia is.
So what's the catalyst to the debt bomb going off?
Well, I think it's the growing realization that when you look, as people want to do at the Fed, theoretically the strongest bank in the world, the Fed is bankrupt in a scenario where interest rates finally get forced up, and that's happening.
So when you say that you see the cracks forming, of course, we know what's going on in the oil markets. We talked about that earlier this show with $10 barrel per barrel oil predicted by some analysts. Shipping, what's going on in the shipping industry, and how is that reflecting troubling signs for the world economy?
Well, shipping is, there's a double whammy. There's this great index that's a little technical. It's called the Baltic Dry Index, and it's a pretty good index of, how tight the market is, the hiring market is for ships. That index is at an all-time low. It's been on a, expert ski slope downhill since November of 2014, and a long-term downward trend as well. Shipyards around the world are going bankrupt. There was an ominous thing out of China recently where even in China, where labor remains cheap, China is beginning to replace low-cost workers with robots.
So is that what you mean when you say that human labor is under siege, that it's a replacement issue, or are there other factors that are influencing pressure on wages?
No, it's a simple supply and demand issue. The supply of people keeps growing worldwide, especially, frankly, in resource-challenged parts of the world, the Middle East, Africa, where there is no real economy other than a farming economy and an extractive economy. Those population growth rates are the highest of all. And, so we have the supply of humans who might want to work increasing. We have the demand for those people decreasing. And this supply-demand for labor mismatch affects us the most. Japan, Europe, and the U.S. us the most because our workers on world scale, forgetting productivity for a moment, just in hard, currency terms, are the most expensive in the world. Easiest to replace, biggest bang for the buck.
Yeah, it's kind of amazing. You've got corporate America going to Congress and lobbying for more high-tech immigration, saying, we've got to greatly expand immigration into this country. There's a high labor demand, and yet those same companies are in the process of laying off thousands in their workforce. I mean, clearly, it's obviously pressuring the wage down, increasing the profit margin through utilization of immigration that is, I think, an inappropriate use of their leverage in Congress. But we see that going on. We've seen that going on in the United States now for several decades with the outsourcing that's happened. What does this collapse look like? You said worse than 1873. What does this look like when it hits?
Well, I actually got back involved in media on September 16th, 2008. It was my first appearance on Bloomberg to talk about how GE could have gone bankrupt back then. They were rescued in a stealth rescue by the FDIC and the U.S. government and other governments. But the way it looks is that, in the morning you wake up and the pre-market indication on big caps, banks, and other stocks is 20% under what it was yesterday. And the volume is off the charts high. Nobody knows what to do. Governments are, in emergency meetings everywhere. And what happens is there's always somebody, and you've been seeing it recently, actually, Chelsea Clinton's husband. It was involved in some hedge fund that, I don't know if it's gone bust yet, but it lost a significant amount of its money because it was caught flat-footed either in the volatility in oil or the volatility in Swiss francs. People begin to get caught. Their margin calls you got to sell something urgently, and you'll see that. Governments will fail. And frankly, you'll see military adventurism. So you'll start seeing things happen in an even more accelerated way that they're happening now. The difference being in 2015, when you go and look at the amount of debt that's on the U.S. economy in relation to the wages paid to people, it's way too high. It's almost 10 times total wages. Total debt are almost 10 times total wages in America for the whole country. And, many people don't borrow anything. So that's just an absurdly high level. When interest rates come back up, as they must do, we can't survive this debt mountain without restructuring the U.S. and the global economy. We just can't do it.
So countries like China, I would assume that the likelihood of military adventurism is higher there than what you might see elsewhere. It's certainly a way to potentially disrupt, obviously, the population's concern about their economic circumstances. But it also is potentially a methodology by which they can help their currency position, correct?
Well, disturbingly, the guy who's in charge, a great site for your audience to watch is called Zero Hedge, spelled out Zero Hedge, one word, .com, and they have a breaking story about how the man in charge of that country, China's foreign exchange reserves, is very concerned by the amount of flight capital, the pace at which flight capital is now rushing faster and faster outside China. China is a country your viewers are geographically perhaps closer to than I am, but I was on last night talking about this. They play rough over there. When a CEO screws up, they kill him.
And it seems like they've got very much a focused objective that has a military strategy behind it. It's very disconcerting. Well, I appreciate your insights, Charles. I'm sure that we will have you back on this show. Very interesting. Certainly, Alaska is already being introduced to a little bit of an economic issue with $10 per barrel oil potentially on the horizon. We're already upside down economically as a consequence of it, so we know that hard times are potentially coming. Appreciate what you're doing. We'll have you back from time to time. Keep up the good work. The Joe Miller Show, we have great guest, Senator Dunleavy, tomorrow. Join us again at 2 o'clock.